Hello everyone, and welcome to our special presentation. My name is Stan Heller, consultant for VectorVest Canada, and I'm very pleased to be presenting on the topic, How to Get Rich Slowly like Grace Groner. So who is Grace Groner, and why is her story so inspiring to so many investors? If you type Grace Groner into your internet browser, you will see many pages explaining who Grace Groner is. You can read about her humble beginnings in the top part of this graphic, but I will just read the second paragraph. After Grace graduated from Lake Forest College in 1931, she began working as a secretary at Abbott Laboratories, where she remained for over 4 decades. It was during her first year at Abbott that Grace purchased 3 shares of Abbott stock for $60 each. She kept that stock for the rest of her life, always reinvesting the dividends. Eventually, her $180 purchase would be worth millions of dollars and would fund the Grace Elizabeth Groner Foundation. A pretty remarkable story, and I think you can see why people are so inspired by that investing strategy and by Grace Groner. Too often, investors perceive dividend-paying stocks as a boring, low-return investment strategy, but as Grace Groner's story shows, nothing could be further from the truth. In fact, VectorVest's founder, Dr. Bart DeLito, wrote in his classic book, Stocks, Strategies, and Common Sense, over the long term, dividends account for over 40% of the profits made in the stock market. Shrewd investors know that reinvesting dividends is the surest way to accumulate wealth in the long run. And that's from page 34 of the little green book. It's on the Welcome tab, and you can download it from there. This statistic actually was proven yet again in a recent study published by the American Association of Independent Investors, and it's true for both the US and for Canadian stocks as well. VectorVest teaches us several investing principles that are important in creating and maintaining a strong dividend growth portfolio. In this webinar, I'm going to focus on the 2 that I highlighted in this week's essay in the views, and they are dividend safety and dividend growth. To invest like Grace Groner, we need to focus on the quality of the underlying stock. It should be a great business like Abbott Labs that has the ability to sustain and grow its dividend payouts on a regular basis. We find these companies in VectorVest by looking for stocks that have a high dividend safety score and a high dividend growth rate. These are exclusive VectorVest indicators that you won't find anywhere else, and they are 2 of my favorites in the VectorVest software. Here are the definitions. Dividend safety. It's on a scale of 0 to 99, and dividend safety is an indicator of the assurance that regular cash dividends will be declared and paid at the current or higher rates for the foreseeable future. Stocks with high dividend safety values have shown consistently strong financial performance, including solid cash flow. And if you have a high dividend safety score, typically you will have a high relative safety score, which shows the consistency and predictability of earnings over a long time. Dividend growth is a forecasted annual growth rate of a company's dividend based on historical dividend payments and dividend predictability. It is a subtle yet important indicator of a company's financial performance. It also provides some insight into the board's outlook and the company's ability to increase its earnings. Very, very useful indicators, both dividend safety and dividend growth, 2 of my favorites. And so the question I asked in Friday's essay is one that I'm sure would have occurred to most readers of the essay, and that is, will Abbott Labs, ABT, be able to deliver similar returns over the next 20 to 30 years, just like it did for Grace Groner? One never knows for sure, but I like its chances, and here's why. Let's go into the program for the US, and we'll get to Canada in a minute. But on the US side, we're in the stock viewer. You can see I've got it highlighted here, and I can just type in A, B, and then it shows me there's Abbott Labs right there, so I can left click on it. And even today, as much as the stock has gone up over the last several years, and those dividends have been compounding for Grace Groner and other investors, you can see it still has very good fundamentals of RV and relative safety, so the growth potential is still strong. And then if I come over and I look at the dividend safety, it is 76, which is excellent, and the dividend growth rate is 12% annualized dividend growth rate. So again, it continues to grow its dividends. And you can see it's a dividend yield of 1.71, which is good. It's not great, but if you bought this stock 5 years ago, 10 years ago, the dividend yield that you are receiving through the magic of compounding is much more than the current dividend yield. And you can see the earnings yield is 4.14, so a very manageable dividend yield when you compare that to the earnings yield. And it's always a good idea just to right-click on the highlighted stock and view the full stock analysis report. You get a lot of great information about the company, the stock graph, and the industry graph. And then if you scroll down, like I'm doing here, we'll get to the dividend information. There you can see the actual amount of the dividend, and then the dividend safety. And we can see it's at 76, which is excellent on a scale of 0 to 99. And stocks with dividend safety values above 75 typically have relative safety values well above 1, and that's certainly the case with Abbott Labs. And the dividend growth rate, you can see it's 12%, and this is above the current average of 7% for all the stocks in the VectorVest database. So again, even today, very good stock, and it's why I'm confident that over the next several years it's going to continue to perform very well and grow those dividends. All right, so that's the US side. Now let's, and I did want to just quickly show you a graph, something you can do in the graph on Abbott Labs that I think is important. So I'm just going to right click on the highlighted stock, view the stock graph. There's the 1-year graph, and bottom left to top right, you can see price is increasing. We've had a dividend increase. Earnings is kind of flattening out a little bit, but still very strong. So what I recommend you might like to do, and again, this is the VectorVest simple layout, and I've just added earnings per share, and through the add parameter, you can add the dividend analysis and add the dividend paid, which is what I've done down here. But let's go to our weekly graph, and let's just go 10 years out. And over the last 10 years, you can see the dividends are increasing, earnings are increasing. They had a share split right here, but dividends have been increasing every year. And if I go back even further, to all data back to 1995, the beginning of VectorVest, you can see price has been moving up steadily, earnings moving up steadily, and the dividend increasing every year. So this is a classic example of a very quality company that's growing its dividend every year, a real good, strong commitment to the share owners. All right, with that, we'll close out. Now I just want to take you into Canada because we can find these dividend growth stocks just as easily in the Canadian database, looking at the dividend safety and the dividend growth rates. And here's how we do it. So let's go into Canada. And I've already gone to the Unisearch tab up here. And I've opened up the Searches Conservative folder. You can see it here on the left. And I've gone to Pale Blue Chips. And I chose it because you can see we require a dividend safety right here of greater than or equal to 50. And we also have a dividend growth rate greater than or equal to 10%. So that's greater than the inflation rate in Canada by by quite a bit actually, and that's what we like because we want a company that's growing its dividend at a faster rate than inflation so that we get a pay raise every year, and it's again greater than the rate of inflation. So I like that. The relative safety requirement is greater than or equal to 1.25. Some volume requirement here, and then we have the sort of value safety timing plus the dividend yield safety and growth descending. So a very good growth rate or a very good sort for us as well. When I run the search, you can see it only returns 4 stocks. And that is the one thing about this search is that it's very selective in the stocks that it returns. You're getting good quality companies with this search. So you can run it and not always get 10 stocks. You might get 1 or 2, or in this case 4. So these are the kind of stocks that we look for. And if we look at the graphs, you can use the same setup here. We've got the earnings per share rising, price is rising, dividend increasing. And if we go to a weekly graph, and I'm going to do a test in a minute about 6 years out. So let's look at the 6-year graph. You can see every year it's increasing its dividend. And actually it's quite a strong dividend yield in this one. Now it did have a pullback here. You can see the sell ratings up at the top. So if you're using the sell criteria, you might have gotten shaken out of this stock, and then it recovered very quickly when the market turned around. 2015, as many of you know, if I put on the confirmed calls, it was a pretty difficult few months from May on. All right, so that's how they look. They all kind of look the same. All right, so we'll close out of that, and then I do want to take us right into the back tester and just see how this strategy with this search would have performed over a longer period of time to try and emulate what Grace Groner was able to do with Abbott Labs. So let's go into the back tester. I'll left click on the tab up at the top, and I'll backtest an idea. If you've already got some backtests, you'll see the new tab, and that's what you would select. So I'm backtesting an idea, and I just want to give it a name here. We'll just call it Pale Blue Chips, and stop is going to be the sell rating from VectorVest. This is sort of our worry-free template that I'm going to use here, although I'm going to use the Pale Blue Chips search. So I would select an existing trading system with the green bar here. And our worry-free winners template is actually this long-term winners folder with long-term winners RS as the search in there. So I'll highlight that one, clicked on select, and it sets up my template for me. I've got $100,000 in this account, and I'm paying $9.95 for the commission. Fairly typical there. From here, I'll just customize a little bit. You'll notice we are using the confirm calls. And for the automation rules, and again, the confirm calls is our slowest timing system. So we want to buy as many stocks on that first confirm call as possible. We may have to run the search or have it automated so that we add a stock every day until we get our 10 stock portfolio, which would give us a nice, well-balanced portfolio. The automation rules, I do want to change the search to our Pale Blue Chips in the conservative folder. The recommendation is sell for the stop criteria. Under more settings, we have 10 positions. We'll automatically replace anytime there's a confirmed up call, and we close a position, we can replace it with a new stock from the Pale Blue Chips search. Everything else is the default until we get to the bottom, where we're going to diversify by having no more than 3 stocks per industry. That's a suitable level for the Canadian market, where we have fewer industry groups than the American market, for example. So we'll just select the 3 there. Under automation rules down, we'll take no action. We'll just let the stop criteria, the sell rating, manage our positions for us. Click on finish, And I'm going to give this a fairly good test. I can't go too far back for time, but I will just take us back about 6 years and start in January because we did have a confirmed up call on January 4th. And I'll just start it on January 3rd and start buying positions on January 4th. We'll click OK. And we'll run the strategy and see how it turns out. So once again, dividend safety greater than or equal to 50, dividend growth 10%, both very, very strong indicators. That means we also have, in this case with pale blue chips, a relative safety that's also very strong at 1.25, and we're making sure we have good dividend yield coming from the YSG in our sort. And you can see the equity curve as it's starting out. We had some whipsaws on the market signals early on, and then things got into more of a normal, fairly lengthy confirmed up calls where we really accelerated in our equity curve, and then a few more sort of whipsaws as the bull market is getting extended here, but we've continued to do well. Our biggest drawdown came right here in the end of 2018. I don't think that would be a surprise to anyone, and it was about 12.27%, which isn't that bad. And then we've started to gain that back with the new confirmed up call. And if I look at our holdings, you can see that we held Metro since 2013, and then some other ones we added in 2019. Overall, $1,034 in commissions, so not too much trading with that sell recommendation. It's a very, very useful stop criteria for us. It allows our stocks to, fairly wide room if they've got good fundamentals, which these all do, but it won't allow us to take a catastrophic loss. 60% winners here from open and sold positions, and a 24% annualized rate of return with a compounded rate of return of 15%. So overall, very, very strong. Now from there, I'm going to try and emulate Grace Groner's strategy just a little bit more. And so I'm going to copy this back test, and instead of selling on the stop sell criteria, I'm actually going to use a 30% trailing stop. Now that's quite a wide stop. Typically your sell rating on good quality stocks would be in that 15 to 25% between the price and the stop price. This is going 30% as a trailing stop. I need to come into the custom trading system here to make that change and click on the automation rules up. Change the stop criteria, so I'll click in there, and we're just going to use the trailing stop, and I'm going to bump this up using the double arrow all the way to 30%. So again, a fairly wide stop now, wider than the sell rating in virtually every case. And I'll run that strategy, and it's opening up about the same way. And you can see the percent winners here. We're at about 70%. It's fluctuating a little bit, but just a little bit stronger than the previous strategy so far. Just move this down a little bit so we can see them both to compare. Whoops. Equity curve looking very, very good again. 2015, that very difficult period, we actually made money going to the upside. And once again, our biggest drawdown was here with the confirmed call in 2018, but this time we did reduce our drawdown to 10.91%. Either one would be excellent, 12 or 10. But we had a bigger comeback in 2019 with the 30% trailing stop. The commissions are far less than we had in the first run with the sell recommendation, about 1/3. So that's a big saving, and our 80% winners is also excellent as well. So that's a change that we can make. For myself, I don't mind in the Unisearch, I don't mind the dividend safety greater than or equal to 50. That's certainly above average for stocks in the database. One thing we can do, though, if you want a little more dividend safety, that assuredness that you're going to get that current dividend and possibly the growth, let's click in the custom value and just change it to 65, which is very good in that 0 to 99 scale. So once I do that, I do need to save the change. Let's see if it just, you noticed here we did go from 4 stocks to 3, and actually it's Capital Power that got removed. So we know that its dividend safety has dropped a little bit below the 65. If I look over here, go a little bit further, but there's our dividend safeties now and the dividend growth rates, and of course they're actually excellent, far better than the 65 for the dividend safety. So now I just have to save this, click on the save button and save as, and I'll leave it in the same folder, so that's highlighted here, and I'll just add PS greater than equal to 65. Oops, that's not an equal sign, that's an equal sign. And there we go, okay. So I've saved this search. I can now go back to the back tester and see if that change made any big difference. I'll use the 30% trailing stop, the one we just ran, as my copy. And from here, I'm just going to put in the dividend safety greater than or equal to 65. Everything else is the same. I need to come to the custom trading system, go to the automation rules long, and it's added the new search down below in the conservative folder. So I'll click on it and click on finish and run. The dates are the same. Everything else is the same. And we're just checking to see if this will have any major difference in our returns and in our drawdown. That's what we're looking for. And of course, we want to see the same equity curve as we saw in the last one, or even a little bit better would be good as well. So you can see the percent winners is running fairly strong again, so that's excellent. Equity curve is very good. Looks like we did take a little bit more of a drop here in 2018, back to the 12.28% max drawdown, but a faster recovery by far here in 2019 with these higher dividend safety stocks. 80% winners, 250% now is our gain over those 6 years and about 4 months or so. And then the annualized rate of return is now up to 34%, and the compounded rate of return 18%. So having a higher dividend safety meant fewer stocks to choose from, but the ones we got were very, very strong candidates to suit that high dividend growth strategy. If I look at our 10 holdings, you can see from the purchase date here, once I click on it, we've got 6 stocks that were purchased the very first year of our strategy. So they never did reach a 30% trailing stop. And then the ones we picked up after that, we had MRU and FSV in 2016. Gildan and Badger were the 2 that came in 2019. So again, very, very strong results. And by holding ATD.B all the way through, 678%. Never mind that these backtests do not include the dividends. And with such strong dividend growth, the growth rate of 10%, the dividend yields for some of these stocks that we would own in this portfolio would be very substantial at this point. All right, so those 3 little tests that you can do, if you have the Auto Timer Genius, you'll notice that you do have the ability to test using the market timing. If you don't have the auto timer, then you're going to have to do some manual testing from point A to point B and that sort of thing. If you want to try out some of these strategies with the auto timer, you can take advantage of a free 30-day trial, and then after the 30 days, you can make a decision whether or not you want to continue. If you do continue, there will be a saving of $100 and I'll show you in the slides how you can take advantage of that. So again, this is just a very small sampling of worry-free investing. There's the search that we were using. There's the equity curve, and again, if you want to take a 30-day free trial of the auto timer, just go to www.vectorvest.com/auto timer, and you'll be set up for a free 30-day trial. And if you decide to continue, make a note in your calendar and make sure you make a conscious decision. If you want to continue, call VectorVest. If you don't want to continue, if you do, it'll just renew for you at the $100 saving. And then I did want to let you know that Mr. Jim Penna, our Manager of Retirement Services, will be in Toronto May 31st and June 2nd for our 2-day investment seminar. And in this section right here, Worry-Free Investing, in the afternoon of Friday, he'll be going into a much more detailed presentation on worry-free investing and the best strategies to use right now. And throughout the 2 days, we are covering in detail the 7 secrets that Dr. Toledo created for making money with VectorVest. And then we have a very special presentation on Friday, Investing in Marijuana Equities and ETFs, a Made in Canada Perspective, and that'll be delivered by Mark Noble, the Vice President for Horizons ETFs. So very much looking forward to that. They truly are the leaders in marijuana ETFs. So if you want to register or get more information about the Toronto 2-Day, you can go to www.vectorvest.ca and click on the live events, and there you will get sort of the summary of the day, 2 days, the details. We are at the Novotel Toronto Mississauga Hotel. There is an early bird rate of $195 US, and that goes away on May 17th, so I certainly encourage you to act. I'd love to see you there in Toronto if you can be there. If not, I would love to see you in the live stream. It's just like being there. You can ask your questions and follow along the live presentations with your workbook that you'll get. And again, the same saving of $100. So truly an excellent presentation over the 2 days, and well worth it. And of course, if you can attend live, the fellowship, the contacts you will make will be very important to you as well. Steve Chappell, our Director of Trading Systems, Ray Clark, our Vice President, Educational Services, are 2 of the other instructors, and then of course Jim and myself. So with that, I'd like to thank you for watching our special presentation. If you have any questions, please call 1-888-658-7638. And thank you very much again.